All right. Thanks for coming. My name is Busch. I run the German Accelerator in New York. We help German startups go global. We also see a good amount of FinTech startups. N26 was a participant in our program last year. We have Raisin coming to New York next quarter. And we're looking forward to some other great startups. What we're going to talk about today is how to internationalize FinTech and InsurTech startups. We have a great panel that I'd like to introduce. First, Georg, you already met. He runs DACH for N26. And next up is Elena. Elena is, welcome Elena. Elena is General Manager Europe for CoverWallet. CoverWallet is an commercial insurance startup. And she is close partners with Zurich Insurance here in Europe. And prior to that, she was in charge of AI for a company called Indra. Then next up is another Elena, who for some reason didn't make it on the slide. Come on up. Welcome. And Elena is head of international at Remitly. And Remitly is in the global remittances space. And she's based in London. And prior to that, spent some time at Expedia and a lot of other places. Last but not least, we have Felix. Come on up, Felix. Welcome. And Felix is what's your title, Felix?
Head of Central Eastern Europe, Middle East and Africa.
Thank you. Head of Central Europe, Middle East and Africa at Stripe, Payments and Treasury Infrastructure. And he's the glue on the panel because he's working with everyone else here already. So,
it's a lucky coincidence.
Yeah. So thanks all for joining. And I guarantee you, this is the only panel that you've ever been to with two Elenas. So please enjoy. All right. First question, we'll start off easy. So the companies you're with are, so one is American-based, Remitly is also American-originated, right? CoverWallet is Spanish-American, and N26 is German, right? So let's start with an easy one, and we'll start with Georg. Why go international? Why not just do, and we'll define international as going outside of your initial region.
Yes. So I think the most exciting part is just this huge opportunity. There is a global unmet need of a much better customer experience. If you think about people that are used to streaming movies in Netflix, used to listen to music at Spotify, they're just not accepting anymore that their bank doesn't offer the same level of customer experience. And I think we can meet that, and that's the main reason why we're going global.
Okay, great, good answer. Elena?
Okay. So in our case, it was very natural because we are a company based in the United States, but it's founded by a Spanish guy. So our expansion to Europe was very natural. And also because we are taking care of a niche in the insurance market. We are InsurTech, we do technology. And we are specialized in insurance for small businesses. So as we develop our product and tested it in the United States, it would make sense to expand it in Europe because now here we are in a market that is not yet so mature enough, and it's like a big opportunity here, and we provide technology with working with big carriers, so the opportunity is now.
So for us, I think it all comes from our customers, which are at the heart of what we do. And our customers are pretty much international people that move the country and live abroad. So for us, it was not even a question. If we are to serve our customers, we had to be international. So we serve, I don't know how many of you know how many migrants are in the world. Any guesses? I can tell you more than adult population of America.
500 million.
250 million. Yeah, almost. But it's a huge number of customers that we try to serve. And so for us, it was no question. We have to be global. We have to be international to be able to do that.
Yeah, I mean, a lot of those reasons apply to Stripe as well. But I think One other point why to go international, I think, is we ran a recent study. Actually, it's called Global Natives. So feel free to Google that one if you're interested. And basically, what we found that companies that go international in the first year, I think the number was 140 percentage points higher revenues and about 15 percentage points higher headcount for companies that, again, that expand global in the first year. And so I think that's, I guess, also a good reason, generally speaking, why going international is probably a good idea, and why we hope that more startups tend to take that route.
Yeah, that's a great stat, actually, 140% more revenue. So you guys are all pretty well funded. We've got a multi-unicorn, we've got a DECA unicorn on the panel, we've got 2 well-funded startups. And so what kind of investors are willing to go along for this ride? Are there, so only one company is really German. I'm curious about German investors. But how do you find investors who want to back an truly international approach in financial?
I believe that the investors who invested into N26 are investors who believe in our vision, believe in the vision that we can address a global need with a much better customer experience, and that who also believe that the market was overdue for disruption. So for us, it was really important that the investors, so the cap table, was very diverse. So the first investors were from Germany and Austria and Switzerland, so from our region. But then pretty early on, we got first, I would say, at least semi-American investors with Peter Thiel. And then very fast, we got our first Hong Kong-based or Chinese investors with Tencent, which is one of the largest technology companies in the world, and most recently, the Sovereign Wealth Fund of Singapore. So getting not only investors from your own region, from your own, I would call it, comfort zone, was crucial to validate our hypothesis that we can really address a global market.
Okay.
And you can shift orders in responding, that's fine.
Well, in our case, we are lucky because we are backed by very big investors like Square Venture, Foundation Capital, and CEEMEA in the United States. So we didn't have any problems for finance, and we are also funded by European like Kibo Ventures, and we are also backed by insurance companies like Zurich has also invested in us. So that's, I think it's good to have different point of inversion and also international because it makes it grow with different points of view. And also the investor helps us to develop a strategy, to give us advice and to support our growth too. So I think it's great to have different variety of sources of investment also to help the company growth internationally.
Yeah, I would confirm all what was said and will say that it's a very fine dance, and choosing your investors is actually very important because eventually it's your board that advises you on your growth strategies. I can probably mention 3 investors and they're diverse in terms of how we chose ours and how they chose us. So one is Naspers Group that also invests in Tencent. So this company are presented in 130 countries, so that gives you a sense of their global scale. So for us, it was very important to work with someone who does understand the sector, does understand the tech space, fintech space, and also is global, truly international. The second is Jeff Bezos Expeditions. I guess that doesn't need much explanation, so very strong e-commerce investor. And then last but not least, strategically, we also have IFC as our investor, which is an investment arm of the World Bank. And because our ambition is to really reduce the fees of people sending money back home, especially low-income, blue-collar people that send regularly, IFC and World Bank very much kind of work in the same domain, trying to make it more affordable for people to send money back home. So I think it's always a trade-off of being strategic, but also bringing on board investors who can really add value and help you grow.
Yeah, no, it's just again, it's the benefit of being the last one around. So,
You get the next question first.
Sounds great. No, basically, I would just echo what was said. If it's good to have a broad set of investors, and especially if you have a global ambition, you want to have also global investors. I think that's true for us, and it's true for also almost true for everybody.
Okay. So let's talk about some of the potentially challenging areas. First one is regulators. So you're all in pretty regulated industries, and I know personally from N26 taking its dear time in the US to get everything set up to be able to launch and work with all the different regulators on the state level even. Talk about how you approach regulatory in the different markets you go in, and we'll actually start with you because you've been doing this the longest and you're probably dealing with the most regulators right now. Regulators.
No, indeed, you're right? It's either a country by country decision or it is a regional decision. But we generally, I think we approach regulators very upfront because there's sometimes this notion of startups expanding, going a Wild West approach. And
don't do an Uber.
And so we believe sort of in rather sort of be proactive about the whole thing. In fact, actually for us, it turned out many times also that this is also a business advantage. Like the last example, I just give you an example here, was strong customer authentication, which is a regulatory change in Europe. And we got ahead of this topic quite early. And I think the deadline for this is September 2019, and so we feel now we have done homework for us and for our users, and regulators actually seem to really like that. And so, while not everybody else in the industry has, and so there's also benefit of actually being proactive and having those communication channels open.
Okay.
Yeah, I would say being prudent and being compliant is probably the most important in our industry because it speaks a lot for the reputation of any organization, which is critical and once destroyed and can't be really restored. So you're exactly right. You mentioned that I think it very differs in the US. The problem is the regulation by state, so it takes very long time actually for European startups coming in the US to grow because you have to go through the burden of getting the approval state by state. In Europe, I guess the challenge is different. You can get one passport and operate immediately in Europe, so it's very easy to scale from the kind of regulative compliance requirement, but then you have all the challenge of localization, and here I don't speak about translation, I speak about KYC process, payment methods, bank partners, et cetera, which definitely differ by each country and have their own approaches to the way they do things. KYC is probably one of the most challenging things in Europe outside of the UK, I would say. So I think it's very different. It definitely requires very strong product organization and legal and compliance organization. But the challenges are different depending on which continent, I guess, you try to grow.
So in our case, as we were born in the United States, it took a long time to get the license for selling insurance in the different states, which I think it's a barrier. And we also got an insurance to operate in Europe. Now the regulation problem in terms of growing in Europe is not that big because the license is valid for the different countries. But in my opinion, we have other different kind of barriers, let's say, because, for example, the different data policies like GDPR and those kind of things have made that change. Things that we did in the United States in a different way than we have to do here. And also the difference between country to country has things that not only affect the regulation, but also the cultural setup. So not only languages, but we just recently launched in Switzerland. And what we have found there is that the different culture and the different insurance products were also different, and we have to adapt them to our platform, and also how the customers behave in terms of how we have to answer them the question and how do they behave, and also how they pay or how do they use to manage their full customer experience. And I think there is a mix of regulation, history, and also cultural and language. So, I mean, the challenge is not just regulation because everybody can be like, well, accused to the legacy or to regulation, but I think there is a mix of things that has to be taken into account when we are thinking of opening new countries, and especially in Europe that has a strong legacy in terms of cultural. Thank you.
Yeah, so collaboration, like very positive collaboration with regulators is one of the most important assets fintech can have. And notably in light of some of the criticism we received lately, I want to leave no doubt that first of all, N26 pays a huge attention to very positive collaboration with other regulators, and at the same time, comments we receive are critical for us, and we implement them extremely fast. So, and the same doesn't count only for Germany, but also translates to all other markets we operate. We sustain very positive relationships in all our markets in Europe, as well as now particularly interesting in the US and Brazil. And US was mentioned, that is a particularly tough market in terms of regulatory requirements, because you need a bank license for every single state. But at the same time, for us, this is a huge asset, because as a fintech, if you're able to sustain such positive relationships with regulators, you have a huge head start compared to other fintechs that might be coming much later. Mm-hmm. And at the same time, when we are launching in the US, we will launch in all 50 states at once, which is also one of the reasons why it took us a little bit longer than we expected. But as soon as we launch with a big bang. And it's going to be a big challenge, or essentially for us, it's going to be a USP in comparison to other even regional banks in the US that try to catch up.
Good, very interesting. Kind of building on the different parties in the ecosystem. So you've all touched on customers, and we'll go to that in a minute. One thing I'm curious about, and I had conversations with some of you about this, is how do you work with incumbents, whether they're your dear competitors, like N26, I think you're worth half of what Deutsche Bank is worth today, or in Stripe, in your case, probably every one of you is dealing with either legacy providers or partners you have to work with that you have to integrate with, or Western Union or other pesky people. Not that I dislike them, but they charge very high fees. How do you approach that from both a cultural perspective? You guys are all young and dynamic and smart startup guys. These guys are not necessarily the same. How do you approach it from a cultural perspective, and how do you make sure it doesn't imperil your business? And anyone can go first.
Happy to take that one. No, I think for us, basically, it's pretty obvious that this is not a single player game, right? I mean, this is actually something about partnerships. It is about the networks, ecosystem. And so for us, we started very early, working with very large partners, which were back in the day, looked a very small company compared to that. And so luckily they didn't ignore us, even though it was just two random Irish people sort of calling them up. But so yes, so that has been from the early days sort of being something we had to learn. And I think it's something you can't. It's not against. It's like a with. And even though it's not trivial, but I think it's a skill you need to have if you want to do this right.
Yes, we disrupt likes of those you mentioned, Western Unions, MoneyGrams of this world. I would say the biggest challenge for us, I think, for us, it's the times when there was offline retail and things were moving into online retail and people were suspicious about Amazon and they didn't quite know how it works and whether it's trustable. So it's the same thing, I think, with fintech space and general payment space, that it's still very much offline for many people, whether through a traditional banking experience or through kiosks, et cetera, and the whole kind of everyone standing here, it's probably 10-15% of the market right now versus all the offline space. So I think for all of us standing here, the biggest challenge is how we educate the customer about the payment space or the fintech space or the banking online space and make them more and more online savvy and comfortable to make their transactions online. So I think that's probably the biggest that we face, how we educate, how we make sure that we build trust and that they switch from kind of traditional players that definitely charge very high fees just for all this, because of all this brick and mortar that they have to maintain.
Yeah. I like the part of the education because we have to educate everybody around us. So our business model, we are an InsurTech company. That means that with technology, we take care of part of the marketing, the digital marketing, the platform, and the customer experience and data and analytics. And our business model is based on collaboration with incumbents. So we are working with big insurance carriers, and we work through partnerships. So they put their insurance product and we put the technology. And that means that we have to do a marriage between the both of us, and we have to live together for the rest of our lives every time we launch in a in a country. And that means that when I'm asked what I'm doing in my job, I say, well, I'm working for an InsurTech, we do technology and these kind of things. But in my day-to-day life, most of the time I discuss with insurance companies. And that's part of the game. Because at the end, what we do is we grow a business together and we transform the distribution channel, bring it to a digital level. And that means that we have to educate both the customer and also the carrier in terms of how they have to understand the new customer and how also the insurance product has to be transformed and adequated to the digital level. Perhaps we have to adapt a big, long form with a lot of questions that are usually asked for underwriting to a shorter form because it has to be dynamic and change depending on what the customer needs or doesn't need. And that also means that we have a lot of data and analytics feedback that we give to the insurance companies to improve their products and to know better what the customer and the digital customer is demanding. And that's a very beautiful experience because we learn a lot about the customer, but both of the insurance too. And I think it's a great experience for both of us, for the insurance company and for us ourselves to know better the insurance.
I mean, we really like competition because competition drives innovation and innovation makes us stronger. So at the end of the day, banking is not a winner-takes-it-all market. And there is a lot of space in banking, especially if you think about Europe. It's just so fragmented that even disrupting just a part of the market is already a massive success. And at the other side, when we come to incumbents, we're not thinking just about traditional banks, but we also think about insurance companies, other payment providers. And we're not trying to do everything better than everyone else. We rather focus on what we can really do really, really well. And that's building a great product with a really excellent customer experience. But at the same time, we do collaborate with other incumbents. For example, Allianz is a very strong partner from us, and they're fully integrated in our premium products, where we are selling essentially premium cards together with Allianz Travel Insurance. And because of that success, because they also saw that we grew very fast in doing that, they invested eventually into us because they believed in our vision of collaboration and at the same time fast but sustainable growth.
Great. Something I want to pick up on that, so you guys all mentioned education, and in 3 out of the 4, this one leaves you out, but we'll get back to you. You're talking about brick and mortar essentially. So all your competitors are traditional brick and mortar. And now for me, walking around Berlin the last few days, I've noticed that retail seems to be doing pretty well here still. There are a lot of small shops, and there's actually interesting stuff. In New York, retail is pretty dead right now. If you want to rent a store on Fifth Avenue, there's a lot to choose from. Talk about how you guys think about retail either now or a few years out. Are we going to see an N26 brand or a CoverWallet insurance brand or a Remitly branch in some way or shape or form offline?
I think it's a very good question. If you would ask me about America or our Western Europe world, I think it will move into digital very much. So UK is probably one of the biggest examples of the current brick and mortar misery. I can't speak for other countries, but I live in London and we see bankruptcies kind of happening on a weekly basis, which is sad in a way, but fact. Having said that, I do think one thing that we should really remember and think about that the global world is very much cash world. The cash actually payments are growing year on year from 7% of the global GDP to 9%. I don't know if you're aware of that. Because people that live in Philippines, in India, in Pakistan, in Poland, in Romania, etc., they still transact in cash. So we were speaking about incumbents, while on our side we're all becoming more and more digital. We, for example, still provide bank payments, but also cash pickups. We can deliver cash at home. Because people that work here, they have their parents that at times are illiterate, can sign for their check in a bank, it comes to that, or they need to pick up cash and they prefer cash. So wherever you are, just thinking global, because sometimes we innovate for such a small segment, like we're cool tech and we innovate, we need to think about the whole world. And if we are truly to serve people that work around this world, I think incumbent still will be very, very relevant in emerging markets. And we partner with 40,000 banks and disbursement places or shops to just deliver cash to people, because that's what's important. So I think it depends on where you are.
Okay.
So in our case, and in the case of insurance and InsurTech, I think it's there is no alternative. I mean, insurance, it's an area that's becoming digital more and more, and is still starting to see the big change. So I think the next 5 years and also the next 2 years will be crucial in terms of digital transformation, which also means that even if the countries and the level of digitalization is different, it's more quicker and more reachable than it was before when we had other industrial revolutions. I'm referring, for example, that we see that now 50% of our customers are mobile. And even though people are not familiarized with computers, everybody has a mobile phone. So this goes quick because everybody looks for something that they need on the phone, and that's the first access and the first touch with the customer that we have. On the other side, it's true that the change is not from 0 to 100, and nothing is going to be 100% digital, because we have also a part of advice, of personal touch, that the customers, especially the insurance small business customers, needs to have, which is a human advice. So we have like a very open omni-channel, we have a call center, we have personal attention, but the customers want to have it immediately, and that's the things that digital provides. And also one of the other things that we are also doing is we are providing with digital tools to the agents, to the traditional career agents that wants to have this digital transformation, because one of the things that happens when we arrive to an insurance company is that the agents say we don't want them here because we are losing our jobs. And that's the big fear. So we are not trying to bring the jobs out of the agents, but we want to provide them with digital tools to help the digital transformation too. So I think there are many kind of different levels and many kind of different actions that we can do to help the industry to transform.
Yeah. When people think about branches, they typically don't think of just, they don't think that they like the brick and mortar, but they typically think of branches as a way of customer service. And although N26 definitely will never build a real branch with gold-plated.
Let's remember that
quote
quote if you do.
Pardon?
Let's remember that if you do.
I'm happy to do, yeah. But for us, the big question is rather how can we provide a superior customer service? Because customer service is more important than ever. And some banks deliver it through their branches because that's what their customer target audience expects. But at the same time, we believe in customer service through our device, and we want to deliver customer service wherever our customers are, and that's right where their smartphone is, because humans and smartphones rarely separate these days. And that is why we scaled our customer service operations so much in the past 12 months. We now offer customer service in 5 different languages, and we're now rolling it out in the first step to a 7-day-a-week customer service, and on a long run to a 24/7 customer service. And that's a huge opportunity. If you think about, even if you're a German living in the US, you can get 24/7 customer service in German for your American account. The same goes for a Spanish person living in France, getting Spanish customer service. That's an opportunity that is very hard to sustain with a branch network. But we believe that our customers don't become our customers despite the fact that we don't have branches, but because we don't have branches.
Okay. Let me actually add something. I don't think that Stripe will be. I don't think there's going to be a branch for Stripe. But let me make a different point, which is I think Elena said that before as well. Today, I mean, in the past 20 years or so, the online commerce basically went from, let's say, 1 billion to today 1.5 trillion globally, which is like 1,500x more or less. And if you think that's a lot, right, then basically you just have to remember that that is about 5% of global GDP. So basically 1.5 trillion is just 5%. And then, well, it's everybody's guess, like, is that going to stop at 15, 30, 50, 60, 70, 800? Like, I mean, there's no reason why it should be 5, right? And if that's the case, then, well, again, then this 1.5 trillion is going to look like a small number in a decade's time. And so I think that's the big picture that I think it's important to keep in mind. And I think why, so when you have to prioritize investments, it's probably that area where you really want to be strong.
All right, no, we're not buying retail stocks. Great, we have only 5 minutes left, so 2 quicker questions. The first one is, I'm sure you've all encountered pitfalls or failures in your internationalization efforts. Each one of you just name one thing you screwed up and what you learned from it. Unless you never screwed up anything, and that's fine too.
I can start on that one.
All right.
So I think in 26 at one side we experienced really hyper growth, but on the other side, of course, the challenge is always how can you make sure that your customer service, your customer operations, and in general your operations scales at the same pace as your growth. And we did experience, as it was mentioned in some of the newspapers recently, end of last year, we couldn't hire enough customer service agents at the same pace where we grew, because we won 2 million customers within less than 12 months time. And that was an incredible success. But on the other side, you have to really then scale up the rest of the organization. And obviously, because customer satisfaction is one of our main growth drivers, it was super important for us to make sure that those customer needs are served. And that's why we had to very quickly, within just 6 or 8 months, scale from 200 customer service agents to 600, and we will grow it to way beyond that in the next couple of months.
Okay.
So in our case, I think the most difficult and challenging thing, and also we can say the pitfall, it's the way in which we try to approach different countries and the different cultures for negotiating, because as we came from America, well, we came with a very American mindset in terms of negotiation. And what we found here is that negotiating with Spain and Italians is very different than negotiating with Swiss teams. And it's important to put in the skin of the other side of the table before starting a negotiation and understanding very well their culture and their business and their product. And that's, I think, it's worth to invest time before starting that, because we grasp.
Cultural understanding.
Thanks. Well, I just started 6 months ago. I don't have time to screw up as yet, but we'll probably update you next time. But for me, it will be, as a US business, very large US business, I think often businesses make a mistake of assuming they can just roll out the product and it will be a success. So I would say for us, it's truly building a local team and hiring people who understand local specificity and can scale up, especially when it's kind of a large startup that tries to enter the other market. It's very much a scale up rather than startup done. So it's a very different problem statement. So I think for us, it's how do you build the right business model and hire right people, because at the end of the day, people drive your business.
No, I mean, this sounds very true. I mean, we had luck in it so far as we were clear that we want to expand. We had an idea that we want to hire these people early, and we understood that you don't hire an individual, but you hire a branch, right? This is one person is going to hire a lot more people afterwards. So we got those things right. I think what we learned was sort of the engineering part of it. So we kind of, I think we could have done earlier sort of pushed product teams, engineering teams out to the regions. And so in the meanwhile, we do have teams in Singapore and Dublin, many other places. But that was, I think, a piece where I think if we do it one more time, I think that's probably what we would do earlier.
Okay, great, good answers. Last question. There's a lot of smart people in the audience. What are you looking for from the audience? Say one thing that is on top of your list and how someone in the room may be able to help you.
Okay, let me start. So I have been very surprised by the things I've listened at that conference. I I knew that Germany was a very big and very strong country in terms of fintech and insurtech, but what really found in this conference is that this is real. There are a big amount of companies that are working here, and I'm really excited about bringing a business here because we are relatively new in Europe, so we launched our business last year, and we have Spain and Switzerland. And for me, Germany is an opportunity, and I'm looking to expand the business. I don't know yet how and with whom, but my intention after this conference is that I want to work with you guys because you're doing extremely well. So that's that's my feeling.
All right.
Well, for me, I guess it will follow from my previous statement. We would love to hire a strong team here in Berlin and Germany generally, and expand in DACH. So for me, it's a lot about talent, but also about understanding migrant communities, how people think about money, how they send money back home, how is it different from community to community. So that's probably what I'm thinking and what would be helpful.
I guess for me, it's like, I mean, either it's companies like these I'm standing next to that do their thing and we help them scaling, or it's partners. Let me actually, anything that helps increase the GDP of the internet, I think is good.
Right.
And so whether you do this on your own or we play a part, I think that's fine. And so
That was very noble of you.
yeah.
Great.
All right, Georg.
I can just say we're hiring.
Customer service agents, anyone?
Well, not only customer service agents, but we're hiring. I mean, just until the end of the year, about another 600 people. Yeah. A lot of people in management. So if you're tired of traditional banking, please don't write me on LinkedIn. I got a lot of messages, but please check out our career website. All our management roles are there.
All right, great. Thank you for listening, and thanks to the panelists.
Thank you.
Thank you.